Hey guys, did this real quick trade this morning and pulled in $100. On the surface, it looks like I'm losing money hand over fist on this trade. But let's dive in a little bit deeper to have a look at what's actually going on with this trade. Because yes, this trade is going wrong. Yes, I am losing money on it. But here's what I'm doing and why I'm not worried about it. So this morning, I was having a quick look at some of the shares that I already own. In particular, I was having a look at WDS, Woodside Petroleum. And I currently own 800 WDS shares. And even though it says 200, that's because I've got 200 here and 600 reserved for a total of 800. Meaning I've got 600 put away in another area of my ComSec account, which I can release at any time. So the bottom line is I've got 800 WDS shares that on the surface, well not on the surface, it says I paid $27.85.2, which means, given today's price of $23.19, if I paid $27.85.2, I'm down about $3,700. Oh, damn. But let's dig a little bit deeper to find out how I've been able to pull more money from this trade than what initially looks like on the surface, plus how I've been able to pull in additional money during the duration of this trade. Let's have a look. And as always, quick disclaimer, I'm just a dude who trades from home in my spare bedroom. I'm not a financial advisor, I'm not a guru, I'm not selling you a course or a book or a subscription to my stock tips. There are no stock tips. This is just me talking through some of the trades that I've done or am doing, which is purely educational, based on factual information. Do not take it as trading advice, recommendations, any of that stuff. Let's move on. So as you can see, I've got 200 WDS shares in this part of my account. Jump over to another part of my account. There's another 600 of them sitting there for a total of 800 WDS shares. Now, when I looked at the WDS chart today, I could see it's up a little bit from yesterday, which is nice, but it's currently trading at about $23.19, which is not ideal because, according to this, I paid close to $27.80 for my shares that are now worth $23, and I'm sitting on a loss of $3,700. Ugh. So let's have a look at my WDS share positions. When did I buy these shares? How and why? If I do a quick search through some of my recent transactions, you can see that I bought 400 WDS shares at $28 on the 16th of the 5th. So that's the 16th of May 2024. I bought 400 WDS shares. I also bought another 400 on the 15th of the 8th, which is August. So 16th of May, my first 400 for $28, and the 15th of August, the other 400 for $27.51. Here's why. If you have a look at what happened here on the 22nd of April 2024, last year, I sold 4 contracts for $28 put options expiring the 16th of May 2024, meaning I gave somebody the right, but not the obligation, to sell me 4 100s, so 400 WDS shares for $28 each. And for that right, I received 41 cents times 400 for a total of $164. Minus GST and costs, I pocketed $128. So I haven't bought any shares yet. All I've done is gone to the market and said, hey, does someone want to sell me 400 WDS shares on or before the 16th of May for $28? And if so, you can pay me $128 right now for that privilege. Now, this was on the 28th of April. So this was about April somewhere. So the stock was trading up around here somewhere, which is closer to $30. Okay. So why is anybody going to sell me their WDS shares for $28 if they can get 30 or above in the market at that time? Well, they are taking insurance over the potential of a fall. So they're saying, yeah, I'd like the opportunity to potentially sell these shares to you for $28 by the 16th of the 5th. So January, February, March, April, May. So we're looking at the 16th of the 5th. So around here somewhere. Now, you can see that at that time, around the 5th month, the shares were trading less than $28 because here's the $28 mark. So I did get exercised. Somebody did sell me their 400 shares for $28 each. Why wouldn't they? If they can only get 27 odd at the market at that time. So remembering what I said is, you can sell me 400 WDS shares on or before the 16th of May for $28 each. But for that, you need to give me $128 right now. Well, obviously, the 16th of May came around. The market was trading for less than $28, which made my proposition a very viable option. 16th of May, yes, I was forced to buy 400 WDS shares at $28 per share because I was exercised. Somebody took me up on the opportunity to sell their 400 WDS shares to me for $28 on the 16th of May, when on the market they were probably trading for 27 or something. So yeah, they took me up on it. That's how I got exercised on the 16th of May and ended up with 400 shares, WDS shares, for $28 each. The second lot of shares I bought was on the 15th of the 8th, which is August. I also purchased 400 shares for $27.51. Why? Well, you can see that on the 18th of June last year, I sold another 4 contracts, meaning I gave the right to somebody else to sell me another 400 WDS shares for $27.51 per share, expiring the 15th of August. Now, this was a European style option. It wasn't an American style option. So they could only be exercised on the 15th of August, not any time before. So essentially, I'm saying, do you want to sell WDS to me on the 15th of August for $27.51? And I said that on the 18th of June. So on the 18th of June, what did the market look like? Again, looking at the chart, if we look at May, here's July, so June is around this area here. The market was probably trading at around about just over $27. Nobody knew what was happening in this area here because we were only looking at the market from that time frame at that time. So at this point in time, if I said, hey, do you want to sell your shares to me for $27.51? And at the time, the market's trading around there, it probably looks like a fairly viable option, which is why I was able to get 99 cents per contract. So 400 times 99 cents is close to $400, $396. Less brokerage and cost of $35. I got to pocket $360.48 for writing these options. Now, of course, when the 15th of August came around, somebody had the right to sell their WDS shares to me, 400 of them, for $27.51 on the 15th of August. Would they do it? Well, here's July, here's September, so here's the 15th of August or thereabouts. The stock's trading down here at about $25, $26. If you can sell the shares to me for $27.51, of course you're going to. So again, I got exercised, which is why on the 15th of August, I was exercised and forced to buy another 400 WDS shares for $27.51 for a total cost of $11,000. So they're the only 2 times that I've bought the WDS shares in the last 12 months or so. So that explains why I'm currently today in March 2025 holding on to 800 WDS shares because I was exercised on 2 different occasions. One time I was forced to buy 400 of them for $27.51, and the previous time I bought 400 of them for $28. But here's what else I've done. So of course today I'm looking at Woodside and thinking, oh, that's right, I've got 800 Woodside shares that I don't have any options on currently, and I'm sitting on a bit of a loss. Now, if we're sitting on a loss, there's a few things we can do. Either we can ride out the loss and just hope the market comes good, which is not always the best thing to do. We can take the loss before it gets to a big loss like this, or we can dollar cost average. We can sell options. We can sit there and take the dividend income. So there's a few different things we can do. And I've done all of those. Well, I haven't taken the loss, but I have certainly sold some options. I've collected some dividends, and now I'm dollar cost averaging. So here's how that works. And just in case you're not quite sure what dollar cost averaging means, it's essentially this. If we had some shares and we bought some here, and let's say that's $5, and then the shares fell down to here later on to say $2, we could essentially not only buy some at $5, but as the market falls down to $2, we buy more. And then that averages our holding cost. Now let's just say when the shares were trading for $5, I bought 1,000 of them. Wanted to spend $5,000. So 5,000 divided by $5 per share gives me 1,000 shares. So I currently own 1,000 shares that cost me $5,000. Now obviously if the share prices fall down to $2, I've taken a $3,000 loss because my 1,000 shares are now worth $2,000. They cost me $5,000. Clearly, I'm sitting on a $3,000 loss. So I can either take that loss, sit there and ride the market out and hope that it, comes back to $5 or more and I make my money back, break even, and then make profit, which may or may not happen. Well, the other choice I have is to buy more shares because now at $2, obviously I can buy a lot more than 1,000 shares. So because they're down here at $2, I'm like, oh, hey, give me another $5,000 worth. That gives me 2,500 shares. So that now means, yes, I've spent $10,000, but I own 3,500 shares because I bought 2.5 here and 1,000 here. I spent $5,000. So I spent $10,000, but I got 3,500 shares. So $10,000 divided by the 3,500 shares, that's an average cost of $2.80 per share, not $5. I mean, granted, it's not $2, but it's $2.80. So what that means is I don't have to wait for the share price to come back to $5 or more to break even. I now only need the shares to come to $2.80 or more to break even. So if it goes back to $5, I'm actually in front. Whereas if I didn't dollar cost average, I need the price to come back to my original purchase price of $5 just to break even. Whereas now, because I've bought more shares on the way down, if the stock does come back to $5 and I own 3,500 of them, then I'm going to be sitting on $17,500 because 3,500 shares times $5 is $17,500 minus my $10,000. I'm up $7,500, 75%. So you can see that sometimes dollar cost averaging is a good strategy. Not always, but can be. So when I was looking at my shares today, I thought, WDS, yeah, I've got 800 of them and I've paid a fair bit of money for them. Why don't I put another offer out, because they're currently trading at about $23, for somebody to sell me some more shares? So rather than just going to the market and saying, hey, buy me another 800 or 400 or whatever for $23, I'm going to write some cash secured puts over these WDS shares, which still gives someone the right to sell me their shares, but I'll get paid for it in the process, as I've done in these previous two examples. So that's exactly what I did this morning. I sold 4 more contracts for WDS for $23.01 for options, put options that expire on the 20th of March. Today's the 11th of March. So essentially, in another 9 days, somebody can come to me and sell me 400 WDS shares for $23.01. And for that, I have been paid another $100 today. Got put into my bank account. So I haven't actually bought the shares. I've just sold the put option to give someone the right to sell their shares to me for $23.01. And I've just been paid $100 for it. Great. But I want to run through quickly what I've done over the time since I wrote these first contracts back on the 22nd of the 4th, where I first sold the WDS put options with the $28 expiring price that I got exercised on. So I collect $128. I then sold, and stay with me, this is going to make sense because I'll show you the whole spreadsheet of this in a moment. I sold another 4 contracts, was $27.50. I collected $116. I then collected $128. I then collected another $100. Now here, I sold 4 contracts for a $28.51 call option in this case, and I collected $452. Now that $452, I then bought those back for $400, so that was just a quick $50. I then sold another 4 put option contracts for $360. I bought those back for $275, so I kept the profit, the difference, and again, this will make sense in a moment. I then sold some more contracts, 4 of them for $116, another 4 for $108. You get the idea. Now, another interesting thing to note is, since owning these 800 WDS shares that I was forced to buy, I've collected dividends on them twice, because you can see there was an ex-div on the 6th of the 3rd, which was a couple of days ago, and there was also an ex-div on the 5th of the 9th last year, where I was paid $1.02 per share. This recent one I was paid 83.1 cents per share. So I've also received dividends for owning these 800 shares. Let's have a look at that. Now stay with me, because this is going to make sense. Remember all those options that I told you I bought and sold? Here they are here. On the 22nd of the 4th, with a strike price of 28, with an expiry date of the 16th of the 5th, that's 441 cents I got. So I've recorded every time I've bought and sold options for the WDS shares, and you can see that in total since April of last year I have collected close to $1,400 in option premium, because I've sold options, $1,400 worth. $100 here, $400 there, whatever. Now the other thing is, I've also bought options on a couple of occasions as part of a rolling strategy. Obviously I've closed out a previously sold option, bought it back, resold it in the following month or at a higher price or whatever. So I've spent $679 buying some of these options back. So yes, I've collected $1,400, but I've spent $679, which means I've taken in a total profit of $716. Now, I have also held 800 shares on 2 occasions when dividends were getting paid. First dividend ex-div date was the 5th of the 9th last year, and they were paying $1.02 per share. I had 800 of them, so I received a total of $816. Nice. And then again, just a couple of days ago, WDS went ex-div on the 6th of the 3rd. Today's the 11th of the 3rd. They were paying 83 cents per share. I still owned 800 shares, so that's another $664.80 in dividends. So in total, I've received close to $1,500 in dividend payments, $1,480.80. Now you can see that I was exercised the stock at $28 on the 16th of the 5th, which was May last year. I bought 400 of them for $28. That was $11,200. I was then exercised on the 15th of the 8th, which is August last year, at $27.51. Again, another 400. That was $11,000. So I've spent $22,200 and something. Here it is here, $22,204, because I've bought Woodside, 800 of them on 2 separate occasions. I've also bought $679 worth of options. That's that. That means that in total I have spent $22,883 buying 800 Woodside shares and buying back some options. But I have received $1,395 in option income, and I've also received $1,480 in dividend income. In total, I've received close to $3,000, $2,876.72. So my total out of pocket is not the $22,000. Well, it is $22,000, but I've received close to $3,000. So my out of pocket is actually only $20,000, $20,006. Therefore, if you dollar cost average, yes, I own 800 shares, but I've collected close to $3,000, and I've spent money, yes. So my average cost per share is not $28, it's $25. I hope that makes sense. So the fact is, today, WDS is trading close to $23. I don't have to wait for it to come back to $28 to break even. I only need it to come to $25. Now, my only open obligation on this trade at the moment is today, the 11th of the 3rd, I wrote another 400 put options, which I sold, I sold puts, 400 of them, with a strike price of $23.01, expiring on the 20th of this month. So if on the 20th of this month, Woodside is trading below $23, which it could well do, I am going to buy another 400 of them for $23. So that would mean that would be 23.01 times 400, that'd be another $9,204. I've already spent $20,000, which means that's a total of $29,000 if I'm exercised on the 20th of this month. But I won't have 800 shares because I would have added another 400, so I'll have 1,200. So that means my dollar cost average would be that divided by 1,200. So my dollar cost average won't be $25.01. It will bring it down even further to $24.30 something. A little bit of a long-winded exercise, but as you can see, buying shares, yes, if I'd have just gone out and bought 800 WDS shares back in April last year and paid $28 per share, and today they're worth 23, yeah, I'll be sitting on a massive loss. But I didn't. I bought some at 28, some at 27.50, one, and I've sold options along the way. I've collected dividends along the way. I'm dollar cost averaging as the market's dropping. Potentially, I'm going to pick up some more in a few days, and that's going to bring my dollar cost down to about $24 per share for a share that will probably be closer to $23, $24 at the time. So I'm basically cost averaging on the way down and collecting money in the process. So by the time the next dividend payment comes around, I'll own 1,200 shares and I'll be collecting more dividends. As I get closer to my break-even price here at $24, I will go out and write some nice big fat juicy call option premium over these stock and say, hey, does somebody want to buy WDS shares off me? I have 1,200 of them to sell. You can buy them off me for $26. If someone does buy them for $26, they've cost me $24. I'm making money. Plus I'm collecting the premium. So hopefully this makes sense. Let me know if this makes sense. Let me know what other videos you want to see. This is a brand new channel at the moment. Literally, I've got 20 odd subscribers, and I've had a couple of comments reaching out saying, hey, these videos are great. You should keep doing them. And I'm kind of like, nah, whatever. And look, I appreciate the comments. I really do. I think it keeps me going, because it's easy for me to not do this. Don't need to do this. Don't have to do this. I enjoy doing this. But if you like the video, then like it, subscribe, comment, and that kind of gives me motivation to keep going if I know you're enjoying the content. And if you are getting something of value out of it, then yeah, reach out and let me know, because it does motivate me. It does keep me going. And I appreciate your feedback, your comments, your likes, and your subscriptions. So like and subscribe if you like these videos. Let me know in the comments if there's something in particular you need me to explain in more detail or better or clearer. Some of these concepts I know are not particularly beginner friendly, because obviously as a stock trader, I've been doing this for many years. To me, this is just what I do. I also am mindful that when you're first getting started, if you're just getting started, you're probably thinking, what the hell is he talking about? Slow down, man, this doesn't make sense. Or maybe you're more advanced thinking, man, this is bread and butter stuff. What the hell is he talking about? So let me know where you're at in your journey and what other content you'd like me to produce. But at the moment, I'm just trading. I'm showing you some of my trades. Obviously, I'm not showing all of them because I'm trading a few times a week, but I'm only putting out a few videos. So I'm literally at this point just showing you a few of my trades that at the time give me an aha moment, like, oh, yeah, that's an interesting trade, and I think that could be quite inspirational or educational, which is why I'm sharing this one. Thanks for watching. I'll see you in the next one.